Welcome to our new IFRS Educational Fund Service. This is an initiative of OJ Education Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standard (IFRS) through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to which the answers are provided on IAS 7. This is standard on statement of cash flows. Viewers and subscribers have 30 seconds to select or choose their answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. The difference between the direct method and the indirect method of the statement of cash flow is in the A, operating activities, B, investing activities, C, financing activities, D, operating and investing activities, E, operating and financing activities. Time counts. Ten seconds down. 20 seconds down. Time up. Question number 12. After ascertaining cash and cash equivalents generated in the year, which of the following is not an item found in completing the preparation of the statement of cash flows? A, cash and cash equivalents at start. B, cash and cash equivalents at close. C, effect of exchange rate changes in cash and cash equivalents. D, A and C. E, none of the above. Time counts. 10 seconds down. 20 seconds down. Time up. Question number 13. Tax paid in the statement of cash flows does not include A, current tax liability paid, B, withholding tax credit note for tax suffered used as offset, C, deferred tax liability paid, D, company income tax paid, E, petroleum profit tax paid. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 14. In arriving at the cash flow from trade receivables, the increase or decrease in trade receivables is adjusted or part cancelled by the amount arising from A, other income, B, reversal of write-down inventories, C, operating expenses, D, revenue, E, cash and cash equivalents. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. Question number 15. Which of the following has impact on cash flow from inventories in the statement of cash flow direct method? A, write down inventories. B, evaporation of liquid chemicals used in production. C, work in progress discontinued. D, offset of customers' credit notes with products. E, none of the above. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 16. Reverse stock split, which reduces the number of shares of an entity, is reclassified as A. Investment activity cash outflow. B. Investment activity cash transfer. C. Financing activity cash outflow. D. Operating activity cash outflow. E. None of the above. Some counts. 10 seconds gone. 20 seconds gone. 'Up. Question number 17. An investment qualifies as a cash equivalent only when it has maturity period of not more than A. 180 days, B. 120 days, C. 90 days, D. 60 days, E. 30 days. Time counts. 10 seconds gone. 20 seconds gone. 'Up. Question number 18. Bank overdraft, which forms part of an entity's cash management, is classified as A. Component of cash and cash equivalents. B. Operating activity. C. Investing activity. D. Financing activity. E. A and D. Time counts. 10 seconds gone. 20 seconds gone. 'Up. Question number 19. Capital gains tax paid on the disposal of a building is classified as part of A. Financing activities. B. Investing activities. C. Operating activities. D. Cash and cash equivalent items. E. Not reflected, as it is not a company income tax paid item. Time counts. 10 seconds gone. 20 seconds gone. 'Up. Question number 20. One of the following is not adjusted to profit before income tax expense before commencing the determination of cash flow from operating activities. A. Unrealized exchange gain and trade receivables. B. Amortization. C. Depreciation. D. Impairment of items of property, plant, and equipment. E. Interest expense on the debenture. Now, time counts. 10 seconds gone. 20 seconds gone. 'Up. We proceed to reveal the answers. Question number 11. The answer to question number 11 is A. Operating activities. The direct method or indirect method applies only to the reporting of operating activities. Both methods do not apply to investing activities and financing activities. For investing and financing activities, only the direct method applies as major classes or streams of gross cash receipts and gross cash payments are disclosed. A is the answer to question number 11. Question number 12. The answer to question number 12 is E, none of the above. All of the options from A to C are line items used in completing the preparation of the statement of cash flows. While cash and cash equivalents at start and at close are obvious, effect of exchange rate changes in cash and cash equivalents are not always obvious. The effect of exchange rate changes on cash and cash equivalents held or due in foreign currency is reported in statement of cash flows in order to reconcile cash and cash equivalents at the beginning and at the end of the period. E is the answer to question number 12. Question number 13. The answer to question number 13 is C, deferred tax liability paid. The tax paid presented in the statement of cash flows does not include any form of deferred tax. Deferred tax liability, which are settled in the future, becomes part of current tax in the future that is settled. Settlement of deferred tax liability or reversal of deferred tax asset is a movement which does not have cash flow implications. C is the answer to question number 13. Question number 14. The answer to question number 14 is D, revenue. The increase or decrease in trade receivables is adjusted with the amount of revenue to arrive at the cash flow from trade receivables and revenue. Some portion of revenue is cash or bank settled. The other portion comprises credit sales made in a period. The consideration of the total amount of revenue and the net increase or decrease in trade receivables reveal the cash flow from revenue and trade receivables. D is the answer to question number 14. Question number 15. The answer to question number 15 is E, none of the above. None of the options involves actual payment or receipt or the inflow or outflow of actual cash and cash equivalents. E is the answer to question number 15. Question number 16. The answer to question number 16 is E, none of the above. Reverse stock split or stock consolidation, which reduces the number of shares only, does not have cash flow implication. If it had involved partial or proportional return of consideration for the stock, it should have amounted to a cash outflow as the financing activity. That is, however, not the case. E is the answer to question number 16. Question number 17. The answer to question number 17 is C, 90 days. An investment normally qualifies for cash equivalent only when it has maturity period of no more than 3 months, that is 90 days, from the date of acquisition. C is the answer to question number 17. Question number 18. The answer to question number 18 is A, component of cash and cash equivalents. Bank overdraft is a component of cash and cash equivalents when it is repayable on demand and forms part of an entity's cash management. A is the answer to question number 18. Question number 19. The answer to question number 19 is B, investing activity. Cash flows arising from taxes on income is separately disclosed and classified as cash flows from operating activities unless they can be specifically identified with investing and financing activities. As the capital gains tax paid is specifically identified with an investing activity, it is classified as one of the investing activities. B is the answer to question number 19. Question number 20. The answer to question number 20 is A, unrealized exchange gain on trade receivables. All other items are adjusted for in profit or loss before income tax expense before determining cash flow from operating activities. Unrealized exchange gain on trade receivables remains factored in for ultimate cash flow impact through the consideration of increase or decrease in trade receivables between the beginning and the end of a period for the operating cash flow. A is the answer to question number 20. That is all for this set 2. Thank you for joining us for the set 2 of IAS 7, Statement of Cash Flows. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the service are reserved for OJ Inspiration Limited. Thank you once again, and bye for now.